More companies are staying private longer, which delays liquidity. Can secondaries keep employees with double trigger RSUs happy by delivering liquidity ahead of an exit? For high-value companies looking for a longer runway to an IPO or other exit, double trigger RSUs can avoid the need for employees to pay high exercise prices and also defer tax until after a liquidity event. These RSUs have two requirements for vesting: a continued service schedule and a liquidity event that doesn't require continued service, but that must be achieved in a given period in order to constitute a substantial risk of forfeiture under tax laws. Employees can view RSUs as potentially more favorable than traditional options as they are full value awards, meaning they don't have an exercise price. And that may make RSUs more effective for attracting and retaining your employees. Employees are seeing other high-profile late-stage companies doing secondaries, so they're asking their employers, when are we doing ours? Employees don't want to wait until an IPO or other exit event, which may be further down the road, especially given recent market conditions. Secondaries show tangible equity value to employees and keep them on board longer. Double trigger RSUs have distinct tax issues to consider for secondaries. Although participation may be possible by waiving the liquidity event trigger and allowing the underlying shares to be sold in the secondary. If RSUs are allowed to participate in the secondary, there is a potential tax burden if employees do not actually sell the shares in the secondary, as they have now had a tax event without receiving any additional consideration. So companies should be careful around structuring any RSU participation. In addition, there are also potential tax concerns raised with waiving the liquidity event trigger for RSUs that could impact all RSUs for the company going forward, even those not eligible to be sold in the secondary, by jeopardizing the liquidity event trigger constituting a substantial risk of forfeiture. The IRS has not issued any guidance for RSU participation in secondaries, so be sure to consult tax counsel as these issues are nuanced and constantly evolving. I'm Ashley Wagner, and I've been advising public and private companies on compensation and benefits matters for 15 years.